So you're looking for strong stocks with great dividends. Look no further than the Aristocrat Index or the S&P 500. These are the top 65 stocks that provide growing dividend returns year after year. In this video, we'll go over the top 5 according to this article here by US News Investing, and we'll find out exactly how these rank as far as my metrics and how I will go ahead and evaluate these stocks so that you don't have to. Before we get into that, if you want to learn more about investing, how I invest, and how you can potentially grow your investments, be sure to subscribe and give like to this video. Share with a friend who may need some help as well, and let's get into the content. Alright, so the top 5 aristocrat strong dividend pairs of the S&P 500. Now keep in mind this video data is taken from December 6, 2022, so as time progresses things may have changed. Alright, so what will we evaluate today? We're going to take a look at the company snapshot courtesy of StockCard.io, dividend stats also from StockCard.io. We're going to do some chart review and the expected move as shown on the Tastyworks platform, and we use TradingView as our charting platform. So for number 1 is ticker symbol DOV, Dover Corp. Now over the last 52 weeks, Dover Corp has been up as high as $181 and as low as $114. Currently it's trading about $139, and the target that analysts have pegged for this stock is actually $137. So there's limited upside and potentially downside due to the analyst predictions. As far as the company's strengths and weaknesses, it is acceptable growth potential, strong financial status, it's bearish or oversold for technicals, has a mixed return history, it's an undervalued stock based on fundamentals, and it is a strong dividend payer. There's 75 strengths and 47 weaknesses based on the StockCard analysis. We have the expected move for 44 days that the option market is pricing in at a plus or minus $8.43. The PE ratio is 17.36. Dividend yield is at 1.45%. The annual dividend growth rate is 0.7%. Now let's take a look at the chart. The chart here is a daily chart. The blue lines on the chart there indicate the 44 days till expiration expected move for this stock. So if you think that volatility is acceptable and you want to own some DOV, then that is a stock for you. Now keep in mind that this is just expected move. It is not where the stock will end up. It's just based on the option pricing and the standard deviation and the Black-Scholes model where it's going to be. Next on our list we have ticker symbol PG, Procter Gamble. Now the past 52 weeks it has been as high as $162 and as low as $121. Today's price is about $149 and the analyst target is lower at $144, so it may have some downside or limited upside, as it is currently trading for more than the analyst targets. As far as the company snapshot, it is acceptable growth potential, strong financial status. The technicals are a mix. It's overperforming the peers' returns. It is actually an overvalued stock and it has a strong dividend paying. Its expected move is $6.50 over the next 44 days. PE ratio is 25.84, dividend yield is 2.45, and the annual dividend growth rate is 7.73. So this stock has a much higher dividend growth rate than Dove and also has a higher dividend yield than Dove does. It is of course overvalued based on the fundamentals though, so keep that in mind, and it's a little bit further than the analyst target away for the downside. So let's take a look at the chart. So Procter Gamble, as you can see on the daily chart, it is pricing in that 155 to 143 range with the 44-day option market pricing. So keep in mind here that this could be up or down depending on what the market tells us or what the market gives us, but if you're looking for dividends, 2.45% is not bad. Next on our list we have one of my favorites, And actually the only thing on this list today that I personally own in my personal portfolio, CocaCola. So the last 52 weeks, the stock has been as high as $65 and as low as $52. The current price is about $63 at the analyst price target at $56. So this is another one that is trading far above the analyst price target. So if you do purchase this, keep in mind that it is overvalued as far as what the analysts are telling us. It has very limited growth potential, strong financial status though. The chart says it's a mixed bullish and bearish. It is overperforming its peers' returns. It's also overvalued, and it does show here that it is risky as far as dividends go. So keep that in mind, as we may have a Coca-Cola leaving the Aristocrats Index due to not having enough cash flow, but we don't know that yet. And as far as what we can tell today, it's still a strong member, and according to this list, one of the top 5. Its expected move over the next 44 days is a small $2.47. It has a PE ratio of 27, dividend yield of 2.77, and the annual dividend growth rate of 2.36. Let's take a look at the chart. So the daily chart on Coke, as you can see, it's much stronger than the previous contender, as all-time highs are about, I'd say about $5 away from 63 where we are on today and 67 at the all-time high. The expected move in the 44-day option market is between 65.83 and 60.92. So if that's an acceptable amount of volatility, this might be a good stock to choose, that it is the least volatile of the list. Hey everyone, hope you're enjoying the video so far. This is stockcard.io, and as you can see, this is how I got the analysis for Dover Corp when our company snapshot. Here as well, you can see all of the different individual items. You can click on them and actually learn more about what they actually mean and what these analyses actually say. And to go and show you what I did, we go to the strong dividend paying, and we can see all the information about the dividends. There you have it. If you want to learn more and add Stock Card to your investing strategy as far as research and tools, just click on the description below. We have a link that helps out the channel and helps you invest smarter and quicker with this program. And now back to the last 2 on our list. Next on our list, we do have FRT, Federal Realty Investment Trust. Now this is the only one on our list that's actually a REIT, a real estate investment trust, and therefore it may be a little bit confusing, but just keep in mind that this is highly correlated to real estate. So if you're bearish on the real estate market, this may not be the stock for you. Now over the 52 weeks, it's been as high as 135 and as low as 86. This is one of the few on the list today that's trading below the analyst price target of $115.50. Today's current price is about $106. Company snapshot here. It has acceptable growth potential. It has a strong financial status. Charts doesn't look so good. It is bearish. It is underperforming its peers' return, which could be dangerous as far as it is a underperformer in the REIT market. It's overvalued and dividend paying is not so great. Now, stockcard.io does give or negatively weights REITs as far as dividend paying, so don't look too much into that negative there. The expected move over the next 44 days is a plus or minus $5.91. PE ratio is 22.42. Dividend yield is the highest at 4.05%, and it has an annual dividend growth rate of 0.94%. Now keep in mind, this is a REIT, so the dividend growth rate is going to be relatively smaller, but the yield notionally will be more. Take a look at the daily chart. So as you can see, it is probably the most beat up stock on our list today. It's trading way off of its highs. The highs are quite far away, and the 44-day expected move is at $113 on the high side and on the bottom side at 101. So it is expected in the next 44 days to be still below the analyst target. So do it that information as you would. the dividend yield being 4% is attractive considering it is on the list of the aristocrats. So the dividend has been increasing over the last 25 years. Next and last on our list today is Granger, ticker symbol GWW. Now GWW has quite of a large variance between its current price and the analyst target. Now for the 52-week high, it's been as high as $611, 52-week low at $436. The current price is about $580, with the analyst target about 14% below it at $494.10. Now, as far as the company goes, it has acceptable growth potential, strong financial status. It is a mix of bullish and bearish as far as the chart. Mixed return history. It is overvalued, but it does have a strong dividend paying. So the expected move for the next 44 days is $37.58. Its PE ratio is 20.75. Dividend yield is 1.19. And the annual growth rate is 8.31. Let's take a look at the daily chart for GWW. GWW is one of the only ones in our list today that actually has an uptrend, and it is higher or trading higher relative to where it was in the beginning of 2022 or the end of 2021. 2021 it was closer to here, as you can see down the March, and the 2022, and then it just kept going up. So it is definitely stronger as far as the chart indicates. Now the blue lines show where the expected move is for 44 days out, $627 or $552. Now if that is an expectable range, this might be a chart or might be a stock for you. So there you have it. Those are the top 5 dividend aristocrats. If you like the way that I evaluated these stocks, fundamentally, technically, and volatility, be sure to check out more videos like this on my channel where I go over the top investing, news today investing recommendations and whether or not they actually are a good buy for you or not. We'll see you in the next video.